Hey, good afternoon, everyone. My name is Norman Barnum. I'm the Chief Financial Officer for the New Orleans Business Alliance. I am elated today to be able to moderate this discussion. Entrepreneur investor panel, how do we deal with venture capitalists and make sure that we not have predatory practices and able to embellish our value proposition with the investors themselves. This is the opportunity for me to be able to present to our audience today this distinguished crew of investors and entrepreneurs and have their story tell and be able to learn from them and their experiences in this space. So without further ado, I would like to be able to do the round robin and introduce our guests for this conversation, and then be able to have our dialogue. So if we could, right now, I'll go to the top of the screen. Aaron Walker, Camelback Ventures, give us a little feel for your background and give us some foundation for our discussion today.
No, thank you, Mr. Barnum, for having me today, and to Black Tech NOLA. So my name is Aaron Walker, founder and CEO of Camelback Ventures. We are a national accelerator that seeks to increase access and opportunity, particularly for entrepreneurs of color, through investing in their companies, but also their leadership, and trying to advocate for fairness in their funding. So we do that basically in two ways. One, we have an accelerator program where we write $40,000 checks. And we sort of say we're the friends and family for people who don't have it. Where do you get that initial money if you don't come from money or don't have those kind of networks? And we can get into like the racial wealth gap. And this, to me, is a product of that. One. And then two is, a couple of years ago, we realized that there's so much emphasis on entrepreneurs in this space, but we also need to be talking about are the investors, and like how can we work with investors and philanthropists to really change the water that these entrepreneurs bring in. And so we actually started a program for impact investors and philanthropists, and particularly those that are white identifying, to say, like, entrepreneurs are just one piece of this equation, and we're going to get to where we want to go around equity if you all change. And so we've been doing that work as well.
Hey, very good intro. Going to pass it on to Courtney Williams. Please give us some guidance in this area.
Thank you, Norman. I appreciate the opportunity to be here today, and I appreciate the stewardship of NOLA BA. My name is Courtney Williams. I am the CEO and founder of two companies here in New Orleans. The first is Torch, which stands for Today's One Room Schoolhouse. We are an online coaching platform for educators. Our mission is to improve student outcomes by increasing teacher effectiveness. We're a small company. We've been around for about 9 years, and we're located here in New Orleans. In the process of running that company, I wanted to hire additional talent for my team here in New Orleans, particularly salespeople. And I found it really hard to find qualified salespeople here, and I found it especially hard to find salespeople of color. So I decided to do something about it, and I worked with the city of New Orleans to start a program where we trained salespeople to work at Torch. We only did 4 people, and it was successful. 3 of those people are still with the company, and 2 of them are my top salespeople. Based on that experience, I formed a new company called Upriver Solutions, and we started a sales training academy called the Skills Academy. And the purpose of Skills Academy is to recruit, train, and place diverse candidates from underrepresented backgrounds in business-oriented tech jobs. A lot of time when we hear about tech, people immediately think about engineers, programmers. But in fact, in most tech companies, the non-technology people or the non-engineering people comprise the largest percentage of the employees. So we're now focused on getting more diversity on the business side of tech: sales, customer support, customer service, data management, operations. And the first program that we're launching is a software sales training program here in New Orleans, with our first cohort set to launch on August 23rd. So that's a little bit about me and why I started this program. But as Aaron mentioned, we're thinking about equity, and we're thinking about it from the entrepreneur, from the investor, and we're thinking about it largely from making the space more diverse for individuals on a day-to-day basis.
Hey, brilliant. Thank you for that context also. And finally, our last panelist, Dr. Trivia Frazier. I've had the opportunity to be a part of the Rise with Obatalla Sciences, and very just excited to hear your thoughts in this space as well.
Thank you, Norman. Thank you for, again, your stewardship as well, and you know, serving as a strong partner for us at Obatalla Sciences. So I'm the president, co-founder, and CEO of Obatalla Sciences. We're a biotechnology toolkit firm that is advancing the fields of obesity, diabetes, and regenerative medicine. And our motto is driving diversity in research. So that is much more than a motto for us, but we're essentially advancing a field by providing tissue models of patients of varying demographics, patients that are traditionally underrepresented and not represented at the stage of clinical trials, and bringing that data to pharmaceutical companies much earlier in the process, at the preclinical stage of drug development. Mm-hmm. We are very much interested in promoting diversity at the level of the next generation of scientists, of entrepreneurs, of engineers, supporting them, providing opportunity to them by engaging with our partnering institutions such as NOLABA, but such as also the two-year colleges like Delgado and the universities, and also through, you know, other sources of funding that can help to support those next generation of folks that need that opportunity. And then on the fundraising side, we've had a wealth of experience, I'll say, which we're going to get into in a moment. But some of that being, you know, with us having a goal of identifying smart money that understands the value in diversity. Mm-hmm.
Listen, you teed me up very, very nicely for my storyteller, the next questions that I wanted to get into. And I'll open it up to the panel. We got the feeling for how your companies and how you got started. But let's go down to this. What are the challenges that you face raising the money? And how do the Black tech companies navigate these challenges, and from your perspective? I'll open it up, whoever feels the moment.
So, well, it looked like Erin was about to say something, but I'll go ahead and jump in. You know, I think one of the challenges for us was the rarity of biotechnology within New Orleans, within our region, and you know, that familiarity or lack thereof of our space, and the difference in the timing for return. How labor intensive it is for us being within what's classified as a deep tech space, I think largely was a challenge for us. And that was an additional layer, I would say, in addition to the fact that we essentially have a smaller venture capital community here within Louisiana. Mm-hmm. And that Louisiana historically is known for oil and gas. So there's a lot known about the money that is there available within that particular area, or even as we move into the food and tourism industry, you know, agricultural space. So that lack of familiarity was one of the challenges that we had to, you know, address for the existing community here. And then identifying and really coming to terms with us casting a national net, essentially, fundraising, as we saw ourselves, you know, growing, but wanting to continue growing here, but fundraising on a national level.
Erin or Courtney, I'd like to expound upon that. The challenges internally in our market, a smaller venture capital base, if you will, and as Trivia said, casting that broader net. Could you give us some perspective from both of you with that being said?
So I'll jump in a little bit. So when we started Torch, we started out of New York, which was a much larger investing fund. And so we didn't really deal with having to raise funds here in New Orleans for Torch. I'm dealing with that now at Upriver, which I'll share in a moment. What I encountered when I started Torch was that we were in a space where people either weren't very familiar or didn't really believe that it was going to take off as much as we thought it was going to take off. So we just had a challenge, which I think it should be said, fundraising is hard, right? Like just brown, pink, green, blue, whatever color or gender or ethnicity. Right.
Yes.
just a slog. And I think a lot of times the media will focus on those companies that like have these big rounds, and they make it seem as if they just woke up yesterday, got a big check. It's not the case. So in our case, when we started years ago, we just found it really, really hard to get the attention of funders. And it wasn't clear whether or not it was because of the business that we were in, because ed tech is kind of different, right? There's some dynamics there that some funders are not interested in. Or was it a function of me being a Black founder, dealing with the dynamic? It wasn't clear. But what I want to share about that experience was, and Trivia could get into this as well, because I think she had a similar experience, was that it became clear to me very quickly that there were customers who were willing to buy my product.
Okay.
Right? So I just came up with an alternative funding stream. Rather than trying to raise a lot of money up front to actually develop the product and grow the business to get to a level of scale where we then try to figure out how to actually make money, we flipped the script and said, the people who are willing to buy our products, every time I go to a sales meeting, I leave with a contract. Every time I go to a meeting, I leave with no's. So I just focus much more around selling our product and using it to grow the business. Is what they call, a little bit pejoratively, I think, bootstrapping in the space, right? We just, we ran a business. There are downsides to that, right? Like, it's really hard to grow a really, really big business. Bootstrapping. Some people have done it. It's just not a typical, right? We just opted to build our business, build a real business, and fund it from customer receipts. On the flip side, Upriver, that we're trying to develop now and get off the ground, is a different kind of business and will do very well, I think, with actually raising a lot of capital up front versus trying to sell the product right away. So I'm actually now dealing with fundraising a small market, and there are certain dynamics that are challenging. I think the way that somebody looks at giving you 100,000 in New Orleans is very different than the way somebody looks at giving you 100,000 in Silicon Valley. Silicon Valley, somebody goes, it's in my back pocket, I give it to you right now.
Yes.
If you need anything else, here it is, right? New Orleans, it's a bit of a, it's a kind of it's a deep, deep, deep exam and lots of different conversations that you don't really expect in other places. So again, I think any given entrepreneur is going to deal with this, and it's not a function of brown or black. It's just a big part of the experience about being an entrepreneur.
Hey, Courtney, you got us all smiling on that one for sure. It's a little different in this particular market. Aaron, believe me, I read through the bio, and I know you understand the bootstrap. So I think you walked you right into it. Give us some thoughts.
Definitely. So I'll say a couple of things. One is, when we started Camelback, the idea is that we want to invest in entrepreneurs, and I sort of had to ask myself do I think that I can go out and raise a for-profit fund to do this? And ultimately, I decided that the answer was no. Not because I didn't think I could do it, but I just sort of understood how the game was played. Like, I didn't work at a big venture capital firm. I have a law degree, not an MBA. I didn't work in iBanking. And so in many ways, it was like, well, if this is just about financing a company, I used the little bit of money I had, but then we also just decided to do this as a nonprofit and say, well, this is really just like, how do you get your company financed? And I knew I had the relationships and wherewithal to actually go to the philanthropic community and go and raise money. And so we were able to raise $1 million within the first year to launch a nonprofit accelerator. And the idea was, well, let's just build our own track record. Let's just use this platform, build a track record. And so now we're finally at this point, 6 years in, 80 plus entrepreneurs invested in, where we're going out and, trying to raise a for-profit fund, which is, completely different, conversation, but, we're starting to get there. So that's one. And then two, and when we were launching Camelback, I think a big question was, is the pipeline there? And I think we all know what the answer is yes. Yes. So, a lot of what we've been doing is just trying to disprove this, this alternative fact that people have had in their head about whether the talent is there. And I'm on this panel with two of many people who are out there.
I think the other thing we're starting to hear that's coming through is proof of concept, and once you can validate your proof of concept, your value tell, it's hard. Well, you said black, brown, or green, but you got to have that proof of concept that you actually gonna have something that's viable, scalable, and it's for real for the investors. Having said that, where are these investors coming from your perspective? And we've touched upon, philanthropy in your fundraising experience. Give me some feel for your sweet spot or where you think you can close those deals.
Do you mean geographically, or do you mean in terms of like the kinds of organizations?
The kinds of organizations.
So I'll jump in really quickly. I think for any entrepreneur watching this, I think it's really important for you to have a really good sense of the business that you're trying to start and which funds or investors are interested in those businesses. A lot of funds will tell you on their fund page or their description page that they like all kinds of businesses. Other funds will tell you that they focus very specifically on biotech. And then they might even go deeper into like certain specific areas of biotech. So I think it's really important for you to understand the business that you're in, and you need to do your research because the information is out there around which funds will actually invest in those businesses. Now, for the people who are going to be watching this, because this is a Black Tech NOLA event, you also have to understand which funds invest in brown folks, right? Because just because they say they're into biotech or they're into edtech doesn't mean that they have the foresight or the vision to see your talent and your ability. And so I would argue that fundraising is a networking game. It's a relationship game. And so you need to reach out to your folks and you need to ask the honest questions. Yeah, those guys invest in, fintech, but how many people among their portfolio companies are women or are brown or sort of look like me? I'm like, my head against the wall. It's always easy to start with a friendly investor first, who's going to be there, is going to help you figure it out. And I would suggest that do the research, understand the business, understand which investors are investing in people like you versus just kind of talking the talk. And that's where you'll find it. And, there is a lot of money out there. If there's one thing we've found is that people thought the pandemic was going to completely decimate the world and all the money would drive. In fact, it's the reverse.
Yes.
Private equity, venture capital funds, search funds, like in-house venture funds, there's just a lot of capital out there. So if you do your research, you could find the narrow range of folks who are going to be willing to work with you and, help you get your business off the ground.
Yeah,
that's some excellent feedback. Trivia, Aaron?
Yeah, I was just about to expound on the point that Courtney made about finding the right group and the right investor is truly something that there are many layers to that, right? So yes, you have to, of course, identify the industry that different investors and different investment groups are looking at. But it extends and it is much deeper for founders, that are Black and brown to the extent of, what type of firms have they invested in? That's usually, you can find that on a website where you can just look at the existing portfolio. But, digging even deeper, are they the right types of investors that can bring what we call smart money in that? What are they bringing to the table in addition to money? One of the biggest lessons for me was realizing that I am not only the one that's being interviewed for money when I am talking to an investor. I should be, and now I am, interviewing that investor, right? Yes. What can you bring to the table in addition to your check? Because if I take this money and I'm not able to grow my company, there will be no return, right? For you or for anyone, right? There has to be that access to the right type of people, whether that's more customers, whether that's growing the network, whether that's additional investors that are specifically within the field that can help at the next stage of fundraising. And so understanding what that truly means, it's, for me now, I have the ideal archetype of the investor or investment group that is a good fit to invest in Obatalla. And then the last point I'll make about that is the second hardest lesson for me was understanding the leader follower mentality within investments. And that it wasn't only crucial for us to identify the right type of investors. It was also crucial for us to identify the right types of investors that were willing to lead our round. In the absence of that, no one else would step up and say, I'll go ahead and close this deal. They needed to have someone to come in and set the terms. And the types of groups that we were approaching at first, who were very female founder focused, they were very impact driven funds, were not willing to lead those rounds. And so we found ourselves extending the round much longer than it had to be.
That's some very good information. I think as you expressed it, the perfect profile for your investor, you define what your investor profile is for your company. And I think that is crucial. I think Courtney has spoken to it, and I want to give Aaron's thoughts too. Yeah. But to find, to do your due diligence on the investor, the board composition, their experience, have they led? You guys are touching on some key points. Follow through on that, Aaron.
Yeah, no, definitely. I agree with Dr. Frazier and Courtney on what they're saying. I'd add a couple things. One is, just in terms of strategy, I think that a lot of people are willing to take first meetings. And so I think one of the things that, investors who are raising their own funds or entrepreneurs who are trying to raise money for their company, it's just trying to keep a good eye on how many first meetings you're taking, right? Because there'll be a lot of people who, to Dr. Frazier's point, they don't want to miss out, right? So they're willing to take a first meeting and a first meeting and a first meeting because they don't know. So they just want to play out the strings, see who else is willing to get in, see how the company does, so on and so forth. And I get how the game is played in those kind of ways, but I think oftentimes what ends up happening for entrepreneurs is they spend too much time with people who aren't really going to move the ball down the field with them. And so I think it's really important to hone in really quickly on who are those best targets and actually spend more of your time, with a smaller number of people. It's important to have a big top of the funnel, but I think sometimes we spend a little bit too much time at the top of the funnel and not really enough time sort of figuring out how am I going to get someone mid-funnel to the end. And that takes time too, right? And I think entrepreneurs, and it's hard, period, so I'm not saying that this is an easy thing, but could serve themselves better as a strategy to figure out how can I reduce the number of people I'm spending time with to sort of get them to the finish line.
There's something that we're talking about consistently, and it's relationships. And to understand the relationship internally for yourself and what you need from those investors, and understanding the investor relationship. Could you guys speak a little bit about, those skill sets that you have for yourself? How did you improve your relationship building? And how do you know when you got a relationship that you can close upon?
Well, I think you need to enroll in my Skills Academy sales class.
There we go. There we go.
No, I'm just kidding. I mean, essentially what you're asking is literally a part of the sales process. And I think in some ways, you might want to deconstruct this and think about it as sort of like a sales process, right? You got a funnel. Top of the funnel, you need to get to the middle. You need to get your leads down to a point that they're closable, right? And so one of the things I wanted to highlight around Aaron's point around, focusing on those folks that are in the middle that you could get to the bottom of the funnel. It is very much a relationship game. And so it's almost the same as you don't ever want to just reach out to a fund on their website and submit your business plan or your pitch deck. It's not going to go anywhere. So you need to have some relationship to be able to guide you and say, all right, I'm going to do an intro to so-and-so. And I guess it's in many ways understanding that initial relationship, who's the introducer to the fund, so you can have the honest conversation. Is this the first meeting? Is this going to go anywhere? Because, you're running a business. A lot of times I think, particularly younger funders, not funders, younger entrepreneurs think that the game is raising money. I mean, the game is building your business. And if you're spending all the time raising money or having these meetings, you can't actually run a business. So I'd say the answer to the question is knowing the relationship that you have that's doing the introduction, and determining whether or not you can get a more direct answer from that person about the likelihood of you getting to the funnel with that fund. If you're fortunate enough to have a lot of those, then you'd be able to sit down and go, all right, I'm not going to do these 6. I'm going to do these 6 because in my relationship, he or she has indicated that they know your business. They've invested in people like you. They've invested in businesses like this. They're serious. And that comes from building that initial relationship, right? It's not even so much the fund relationship, it's the person who brings it in and whether or not they can give that information. So I think that the other thing I would say there as well is that sometimes it takes a while to build the relationship and credibility for them to give you a real first meeting, right? It's not just like calling up somebody like, hey, can you introduce me to, Combinator? Sometimes it's going to be like, it might take 3 or 4 connection points and there might be a bunch of conversations, but you got like a real sit down. So invest in your relationships, nurture those relationships, give people. This is another thing I want to point out to people. A lot of times I hear people say, I've got this great idea, but I can't tell you what it is. Because, I don't know, maybe you might steal it or something, or somebody else might steal it. And I try to say to folks, you should have exactly the opposite perspective. Everybody your idea, because it's not the idea that's the winner, it's the execution.
Yes.
Just because you tell me your idea, I'm like, holy crap, that sounds great. Doesn't in any way, shape, or form mean that I have the ability, the resources to actually execute on it. But you might, because you've got the passion, you've been thinking about this for a long time.
Right.
The more people you tell about what you're doing, the more touch points come back to you, right? So you've told 20 people from your graduating class you're doing this. 3 or 4 of those people called them like, yo, I know this fund. They love stuff like this. You've got 4 entry points now instead of 1. So I think it's a lot about the relationships and nurturing relationships, keeping people abreast of what you're doing. You move from stage A to stage B. You now have more than an idea. You've got a prototype. Call your friend up. First, like, hey, I'm at the prototype level. So it's really a lot about these relationships and getting the right ones to get you into the mix.
Hey, Courtney and Trivia and Aaron, I'm taking the course. You got me. I'm in. I'm letting you know right now. But, from both of your perspective, both Trivia and Aaron, because Courtney's nailing it, the timeline or what is the real, how long does that take? Because I think what we spoke to, this is not 2 months, this is not 6. It might take a 6 to 12 month process to get from the initial to the close. And in that period of time, and then in between, what do you need to do? How do you need to polish, not just the pitch, but like I said, your growth opportunity in your business? Could you give us some thoughts about that?
Yeah. And I can speak to my personal experiences with our seed round. We set out to raise money and it was before the pandemic kicked off. It took us 12 months to close the seed round. And, with that, it's recognized as, a moment in Louisiana's history for a biotech company to raise over $1 million that's led by a Black woman. But for me, it was, at the ground, running that race, trying to stay, on course. What I realized is that it was those relationships that I had cultivated, that I had grown without the intention or expectation of those specific individuals to invest. They ended up being our investors at the round. Relationships that I built from folks who I met who were at an accelerator program halfway around the world, who then said, hey, you know what, come and pitch to my group because I think you guys have something here and I know you. I know what you're doing. I know that, I believe in you, right? At that level, the first round of funding to raise, there's a big percentage of that is on the character of you as a founder of your team. And so those relationships absolutely helped and came in. So at the last, I raised the $1 million in the last 3 months of that 1 year course. By recognizing the right individuals to have the conversations with.
Beautiful. Aaron, could you give us some perspective on the philanthropy and dealing in those relationships?
Yeah, They take a long time. It's probably the headline, and in some ways they're even more opaque than the venture capital community, right? Because a lot of large institutions have no solicitation policy. They have to invite you to apply, right? And so it's like, well, how do I figure out how to even get into this network? Which can be even more challenging. Foundations also typically make grants. And so there can be some opportunities for for-profit companies. And a lot of times what I've seen is that foundations want to support, small business, whatever, entrepreneurs through accelerators and through incubators and sort of through intermediaries. And so that's often the tactic that they take. So I don't know if I would necessarily be going to philanthropy if I had a for-profit company that I was trying to raise money from. There are instances that where those foundations do something that's called a program-related investment, which means that those foundations can make investments into companies. I would say that's not something I've seen a whole lot of, but it can happen from time to time.
So
go ahead, Courtney.
I want to make one additional point. So, Aaron is an investor in my current company, Skills Academy. I met Aaron in New York in 2013. We went and asked him for money in 2021. So that gives you a sense. I didn't meet him.
Yeah.
When I met Aaron, he was a lawyer. He was. We were just out in the space and we met. And so we built a relationship. We kept that relationship going. Over the years, I moved to New Orleans. Our family spent time together. I've seen him around. But I never went to him to ask for money because at the time that wasn't my intent, or I wasn't doing something I thought fit into what he was doing.
Right.
When I started Skills Academy, it fit perfectly with some of the things that he was doing, and I had the ability to go sit down and talk to him. And he's known me for 8 years, and so there was enough in that relationship that we didn't get to the point about him like, well, who are you and do I know you and blah blah blah. It was more about the business. So that sounds like a long time, right? But to Trivia's point, there are some relationships that you cultivate not because they're transactional in the nature of like, I'm going to get some money from this person. But when you do start raising money, you're going to reach out to those people because they might know people and they vet you and they vouch for you. And so take all the trees, right? All the trees that you have, and some of those are pretty strong based on the relationship that you've built.
Hey, very good. I think that's great context to give on the timeline of that relationship and not looking at it as a transaction. Every relationship is, good as you build just to acquire, strengthen, and renew. And I think, Courtney, what you just illustrated is strengthen and renew the relationship with Aaron that ultimately led to investment. Here's a question I have, and it's because of the nature of Black tech. I mean, I want to ask it out front. Has there ever been an instance when you felt that race was an impediment in your raise with an investor, and how did you deal with it?
Well, I can speak to that. We were just chatting about that. There were multiple moments, where I walked into a room and I was the only female and I was the only Black person. And I'm, to pitch. It was a first meeting. And so it wasn't in the back of my mind, it was in the forefront of my mind, as in type of questions that I will be presented. Will there be sort of that disbelief of, well, you don't really know what you're doing?
Right.
Or do you have what it takes to grow a company? Can you really grow a company? In addition to all of the other, questions that are traditional standard questions you would, ask at an investment meeting or receive as an entrepreneur. And in one particular instance, there was no reference to the fact that I'm a Black founder or a female founder at all in the initial meeting. It was the follow-up in which I reached out and said, hey, here's some great progress over the last quarter. Just wanted to let you know this, and the response was, well, that's great. It's exciting. I'm happy for you guys. But as I indicated before, minority investment is not our thing. And it was embedded in some, kind words, right?
Mm-hmm.
And so I took that and said, well, thank you for, revealing that to me, right?
Mm-hmm.
I would have preferred to have that in the initial discussion. And so, the process has built a thick skin to the degree by which I actually appreciate folks who are transparent about that.
Mm-hmm.
I appreciate you saying up front, you know what, this is not my thing. If your expectation is that I will be looking for a handout instead of bringing you an opportunity to essentially make a return on your investment. And so that is constantly on my mind as a female and as a Black female.
Wow. Courtney or Aaron, could you share some of your same experiences?
So, I just assume in all my interactions with investors or even sometimes clients that unless I'm sitting across the street, just a second, make this go away, that unless I'm sitting across the table from a brown person, that all my interactions are influenced by race. I can't find the button to make this thing go away, so my apologies. So because I make that assumption, and sometimes it's positive and negative, just go in assuming that there's going to be some interaction here. There's some, the way they're going to view my business, the way they're going to view me is going to be influenced by race. Now, I don't necessarily use that as a negative, meaning it doesn't stop me or it doesn't make me feel any less worthy of being there. It just means that I'm aware that that is probably going to be a factor. Now, there aren't a lot of times that there is a brown person across the table. So 9 times out of 10, when I'm in those conversations, I'm assuming that race is a factor. Sometimes it's a positive factor in a sort of a kind of a weird way. Like there are lots of funds now that are trying to prove that they are, anti-racist or non-racist. Anti-racist is strong. That they're non-racist, and so they're looking to invest in brown businesses, and that is a double-edged sword as well, right? So I'm aware that it is a factor in almost all interactions, and I just accommodate for it, and I deal with it, and I just keep plugging along. So sometimes there's some of the more egregious circumstances, like what Trivia raised. Most of the time, it's much more subtle. But you know that it's there, and maybe you add a little bit more information here or there, or you hear some information, you take it in, and you sort of rephrase it because you know that's inspirational. That's kind of how I tend to navigate those.
Some short thoughts on that, Aaron?
Yeah, I'll say a couple of things. One is Dr. Frazier was sort of talking about like wishing that she had gotten this information earlier, and I think it's just a reminder that to the point where we were making earlier around entrepreneurs and interviewing investors. I think it's okay to ask those questions right up front. Say, hey.
But they aren't always going to be honest, Aaron. I don't think they're always going to be honest.
That's fair. But at least you could ask the question, right? And
you could
be able to discern for yourself the body language, whether you think they're telling the truth,
right?
So on and so forth. Do you invest in these kind of companies? Do you invest in these kind of founders? Whatever your question list is, and just be able to maybe ask like at the beginning of that first meeting, but before you get out of that first meeting, so whether you want to spend more time with those individuals. And I know even with my own fundraising, you could spend time with a lot of people who will sort of play out the string, and you just want to know, how quickly can I qualify you? Like, are you someone to spend time with or not? And sometimes just asking the question, I think, is the best way to gather some of that information. That's one. And then two, one of the interesting things that we've seen in our portfolio is we did an analysis a couple of years ago, and we basically saw, in our portfolio was 95% people of color and 60% women. So most of the entrepreneurs we work with are women of color. That their companies had more revenue after leaving Camelback. They were hiring just as many employees. They were building more diverse teams across race and gender, but they were getting outraised 3-1. And oftentimes the conversation is so much about traction. And it was like, finally, we had a nugget to prove what we always knew was true, which was that it actually had nothing to do with traction. Right? These entrepreneurs had better traction, but their counterparts were raising $3 for every dollar that they were raising, and so
Got it.
we just kind of flip it on investors and sort of say, y'all are the sort of the group we call sophisticated, right? Sophisticated investors, right? We have this sort of moniker. So are you saying to me that y'all are so sophisticated that you want to pay 3 times as much for the same thing or lesser, right? And most people are like, no, right? Well, then the only option left is just the bias that's in the system, and now we can have a conversation about that.
Hey, look, I love to get it real, and believe me, I felt it. Courtney, that was actually me calling you up to get into the skills training. So I apologize for that. We're winding up here, and I really wanted to be able to have from you guys to express to any young entrepreneur that's on the call right now. What is the advice that you would get, the number one thing that you would give them for them to succeed, based on your experience?
Trivia, please.
Whew, that's a tough one. And I say it's a tough one because the number one thing, that I go to is to not be sidebarred or to not be thrown off by the resistance, by the difficulty of the process, right? To understand, to enter when you decide, okay, I'm committing to embark on this process as an entrepreneur, enter knowing that it will be a difficult road. There will be some triumphs that you will have to take the time to just acknowledge, to pat yourself on the back and say, you know what? I made it through this day. That is an A+ for me. And then there are some other times that you'll feel like you need to just keep running and the end is not in sight. But don't give up.
Perfect. Courtney?
I'm just gonna ride along. And the reason I asked her to go first is I knew she would frame it way better than any one of us could, because that's exactly the message I was gonna say. Just don't stop. Then I was gonna do a little cheesy, don't stop believing, because I think that's like a disco song. You just can't stop, right? Like if you believe in this thing that you're doing and you believe that this is a path you want to be on, you have to just keep going, develop the thick skin, and just keep pounding away. There is somebody out there who will believe in you. It may take a lot of hits, but you can't stop.
Aaron, he left it for you, brother.
All right. Well, I'll just add, I love the problem you're trying to solve. Sometimes even more than the solution, right? You may not hit on the solution right off the bat. And so it's okay to say like, hey, I didn't get that one exactly right. I need to pivot the solution, but still love your problem. And then 2 is, Camelback's the 3rd thing I've started. So I can't say the first 2 are overwhelming successes. So I just think, remember that just because something doesn't work doesn't mean that you don't work. Just because something's a failure doesn't mean that you are a failure. And, just sort of keep at it.
Hey, listen, I feel very fortunate that I got the opportunity to moderate this panel, believe me. I'm feeling it. We got a little less than a minute to wrap up on, but I think the one thing that all of you have expressed and very clearly is there's a difference between being involved and committed. And if we're going to go down this path, you got to be all in and fully committed. I would tell you, this team, you're giving it to this group today on our session, and I'm definitely taking that forward, even in my capacity at NOLABA. Thank you, guys. It has been perfect. I can't wait to see you outside of this screen and live in person. Thank you again.
And thank you to my other panel members as well. It was fun.
All righty.
All right, guys.